is David Abella, portfolio manager at Rochdale Investment Management, who studies the retail group from both an investor's and analyst perspective. So, David, great to have you back with us. Can we talk about, some of the day's news, like RadioShack, first of all, big move up here. Any thoughts here on the trade here coming off of that iPhone news?
Right. Well, the iPhone is so hot that anything even attached to it is going to go up a lot. But really, I think it was a bit of a short covering rally on this stock. RadioShack is a retailer that isn't quite so pricey. Even today, it's only 11 times earnings. And I think it gave it credibility to their niche of being a very wireless-driven retailer. There's some people who were questioning whether that would be enough, but I think it does give some added credibility. And at 11 times earnings, it's one of the few retailers out there that's a pretty good value.
What about if we switch gears a little bit to Abercrombie & Fitch? Goldman puts it on the conviction buy list, obviously having a good day, but isn't it a little weird when unemployment is so high and the outlook for jobs isn't so great? I mean, that you'd go and spend money on clothes that are priced more, I guess, than the average sort of teenage clothing store?
Yeah, that's a good point. And Abercrombie & Fitch was certainly beat up all year. It's certainly off its low, like most retail stocks. But it has the worst comps in the sector, minus 20 for a while. Actually, this month was better than expected at minus 15. And that was roughly minus 15. But I think with Abercrombie & Fitch, there's the idea that they still have that name. And that if the economy can improve, you get a little more delta on the upside in that name than other teen apparel companies.
So the 60% gain that they've already seen this year isn't enough compared to other expensive teen retailers?
Well, it would scare me off, I would say. And if you look at the price to earnings ratio, it still doesn't make sense. But the price to sales in Abercrombie & Fitch is 1 times. It has been as pricey as 2 to 3 times. If they can get some of that sales back at high margins, if they can go internationally, which was part of that note, then it could be a good buy. I would be skeptical. I think that there's going to still be resistance in that teen market at those price points.
Let's talk about, Abercrombie & Fitch obviously doing very well this year. Walmart, though, it's down, I think, about 7%. They're reporting earnings. What's going on with their story? I mean, what are you expecting for earnings, too?
Yeah, Wal-Mart was a defensive name. It didn't miss its earnings. So, on the other hand, as the other discretionary retailers improve, Walmart's been left behind. I'd like to point out Walmart in 08 was one of the few stocks that was actually up in 08, especially in retail. But it's losing that gain now as it's been a laggard. But I still think it's a very defensive stock in the sense that we have 10% unemployment, 17 shadow unemployment. That could take a while. I think higher-end consumers are feeling better. The middle-end retail has already priced in the recovery. So I think it's a good defensive bet to stay with Walmart.
Does it hold on to those consumers, that came in these tough economic times? Do you think it'll hold on to those people, or is that the big question?
Well, that's the big question. Plus, their core consumer is part of the group that's hit the hardest. So the question is, if the people that traded down don't stay there, maybe Walmart. It's not expensive by any means, 13 times, but it could remain a bit of a laggard.
What do you think about the hot IPO coming up this week? I mean, the question is the same, right? If the economy recovers, do people continue to go shopping at Dollar General?
Well, I think they will, in the sense that they say that this experience will take a while in the mind of the consumer to fully get out. When they splurge, they may splurge on a name like Coach, but not to the levels they were in 05 and 06. So I think Dollar General could make sense.
And Coach is actually a name that you like, correct? I mean, this is doing really well. It's almost up about 70%. You think it'll do well through the holiday season?
Yeah, well, the thing about Coach is it's a name that consumers like, and they weathered the downturn reasonably well. They're starting to get the momentum back, and it's only 16 times earnings, so it's still a price that makes sense.
Are there any other sort of mid-level luxury retailers that you like? I mean, I'm assuming the Richemonts of the world are still too expensive for people to bounce back to.
That's right. And then the stocks themselves have recovered quite a bit. You take a name like Tiffany, that stock is 22 times earnings, so how much more it can get out of it. But something like a Nordstrom, I think it's priced in 17 times. If it were to miss, say, this week, if it were to pull back, it could be a buy on weakness.
What about JCPenney and Macy's also coming out with earnings like Walmart this week? Any positive surprises there, or are those names that you would be very cautious over?
Well, Macy's is thought to be on target for having a positive surprise, but I think that's mostly priced in. Macy's is doing very well. I mean, there was rumors that Macy's was going to go bankrupt at the beginning of the year, and they've actually got their comps flat. The stock's recovered quite a bit, but I think at this point it's priced in, and I would not be a buyer of Macy's.
Hey, just quickly, only 20 seconds. How's that multiplier effect working? Are these companies that are doing better spending more on advertising?
Well, yeah, that's a true statement, but a lot of that advertising is coming out of Walmart and Target, some of the bigger names. But there has been, earlier in the year, you saw advertising, though, out of retail, full-page ads with Macy's, Lord & Taylor.
5 seconds. Is it going to be a Black Friday for retailers? Will they be in the black, or that's questionable?
I think Black Friday could be okay, and I think holiday season could be better than people think. Not great, but not necessarily as gloomy as people were thinking.
All right, hey, David, thanks so much for joining us. David Abella there, portfolio manager at Rochdale Investment Management.